Hi, and welcome to Hedge Fund Manager. I'm Karl-Mikael Syding. Today we're doing a deep dive into Apple. And remember, a deep dive consists of a couple of permanent points. So we always start with finding a stock, the screening for stocks in a vast universe of potential stocks. And then we do a technical analysis, sometimes only on the stock itself and sometimes also on the general market. The idea with technical analysis is to see if we have any headwinds or tailwinds and what the timing of our potential investment is like. After that, we continue with the price equals F times V part, which is the meaty part of a deep dive. That's where we try to use historical patterns for F, fundamentals, and historical values and patterns for V, the valuations. So we go from historical fundamentals to future fundamentals to forecast as best we can. We make this forecast in a way that looks the least surprising when comparing future trends with historical trends. This should look like a more or less smooth pattern, possibly not in terms of actual sales numbers, but usually either in the growth numbers, adjusted of course for acquisitions and one-offs, or in the second derivative of the fundamental, so the acceleration or deceleration of the growth rate. And after that, we forecast a range or a point estimate of the future share price. So we simply combine our fundamental and the valuation. So for example, sales and price sales, or earnings and price earnings. And we simply multiply those together to come to the future share price. After that, we calculate an average annual return for the share prices, so the annual share appreciation rate, the CAGR for the price. You could call it the P CAGR if you like, and then the total return we could call the T CAGR. Anyway, so we calculate the annual share price appreciation simply by taking the future share price divided by today's share price and then adjusting for the number of years in between using a geometrical formula. And after that, we calculate, of course, the annual total return, because that is what's really interesting. If it's a high dividend yield stock, then the dividend can add a lot of the total return. Sometimes for growth stocks, it doesn't add anything. We will see that when we dive deeper into Apple, where it's actually just a 1% dividend yield addition to the annual share price appreciation. So let's take a look at how we can come to Apple as our stock of choice today. And since we have gone through a few of the other Mag 7 companies, I simply thought it was time to look at one of the really big ones. So I used FinViz here to rank the top market cap companies, and you see Microsoft coming out on top with 3.24 trillion in market cap this morning, and Apple at just under 3 trillion. And then we have Nvidia and Alphabet, which we looked at in a previous video. Both Apple and Microsoft look pretty expensive. You can see here that they are trading at 31 and 34 times 31 and 34 times EPS. That puts a pretty high demand on their growth rates in order to grow into their valuation, so to speak. Remember that the average for the market is about 16 times or 15 times future earnings, or 16.5 times last 12 months earnings. Anyway, both Apple and Microsoft, they look pretty expensive, but are they really that is what we need the deep dive for. I mean, there is apparently a reason, even 3 trillion reasons for the market to award these stocks this valuation. Those 3 trillion, they are not just making guesses or hoping for the best. They are actually buying this stock in order to deliver returns to pension holders or to your own nest egg and your future pension, or to clients that are expecting stellar returns. So no matter if this is automatic money, index hugging money, actual value, fundamental value analysts or investors that are trying to find a good stock to invest in, this is real money, trillions of it, that ended up in Microsoft and in Apple. So we can't just assume that they are either cheap or expensive just based on a price earnings ratio. However, being this big, standing out in a list of stocks, both in terms of size and in terms of a high valuation multiple currently, that at least warrants a further investigation. What I then did is bring up a FinViz heat map. Remember FinViz, this tool, free online tool, and if you click here on maps, you'll get a standard heat map. Here it's based on 1 day performance, and if it's red it's a negative 1 day performance, and if it's green it's a positive 1 day performance. More interesting is looking at, for example, the 1 year performance, and then we can see all these green colors where Apple has appreciated by 17.5%, Nvidia by 37%, Microsoft by 10%. But let's look at instead the price earnings ratio. Here we can see Apple at 31 times earnings, Microsoft at 34, and there aren't very many cheap ones here. You have a legend down here telling you what type of price earnings the colors signify. We can also look for example, the forward PE, and you see they all come down a little bit. Apple's forward PE is 25 and Microsoft's 29, based on consensus forecasts. Anyway, I just wanted to show you this tool in FinViz. Another way of ranking, it could be, for example, price earnings growth rate. So there you would you take into account into the coloring here how quickly it's growing as well. And you can see Apple, their price earnings growth rate is almost 4, whereas Microsoft is just about a little bit over 2. So Apple, from a growth rate perspective, is twice as expensive as Microsoft, and I think that warrants a particular type of investigation. In FinViz, there also is the potential of making, for example, a bubble chart. Oh, I happen to zoom there. A bubble chart. So here under maps, you have a heat map and you have the bubbles chart. The bubbles chart is an interesting one. As you can see, you can combine a lot of factors at the same time. Here you see the bubble size as the market cap. So if you point to one of the big bubbles, you'll see Apple and Microsoft and Meta Platforms, Alphabet, so of course all the big Mag 7. And here it's you can see the bubble color is the sector, and the let's see what the and then we can change these x and y axes to, for example, EPS growth quarter on quarter, and the y axis can be, for example, well, I was looking for the price earnings ratio. Yeah, there it is. And you can do all kinds of ways to find companies that stand out. Now we've already established that we are going to look at Apple because of its high total value, its high valuation, and its high PEG valuation.